Hello, it's Brian Shannon from AlphaTrends.net. I have a little bit of time here available during the day, so I wanted to get out to you a quick little post about the Level 2 screen, a little tutorial. A lot of people ask me about the Level 2 screen and are confused by what it does, how to use it, and that sort of thing. So we'll just take a quick look at it here. And basically, the way I look at the Level 2 screen is that I would call it 90% probably an execution tool and 95% an execution tool, 5% analysis. What we see in this Level 2 screen is on the left-hand side we have bids for the stock. These are people willing to purchase the stock. So they're putting their bids out there to the market. On the right-hand side we have offers. This is the inside market for this stock. This is Microsoft we're looking at right now, is $23.76 bid, $23.77 offered. You can see that sometimes you get an order stuck in the level 2 screen there, but it just disappeared. So it's 76 cents bid, 77 cents offered. So if you put a market order in to go buy Microsoft right now, you would pay $23.77. If you were looking to sell the stock short, you could either sell it short at the bid, so you would click on the short, or you would offer the stock out, hoping that someone's going to come buy it from you. Maybe not at 23.77, but let's say your analysis indicates $23.80. So you click on that, you can see the price change down in here, and you could offer it. So it says my order, I'm offering 1,000 shares at $23.80. I'm not long Microsoft, so if someone buys those from me, it'll put me in a short position. So I could either, again, sell short at the bid, or I could offer my stock out. Now, a lot of times what I might want to do, not necessarily on Microsoft. Let me get to that in a moment. But Microsoft is what's known as a thick stock. What by that it means, look, the stock's traded today, and it's only midday, 64.5 million shares. So in this screen up here, we see that the 23.77.76, it's up 34 cents. Last trade size is right here. The time, here's the bid, the ask, the volume, high, low, volume, close, etc. And on the right hand screen over in here, this shows each of the transactions that are occurring through NASDAQ and the associated market makers or ETFs. So the ECNs rather, Exchange Electronic Communication Network. And I haven't spoken about those in a while, so I guess I was rusty. But the ECNs are, for instance, Archipelago. If I look to how I want to execute my order, I have some choices in here. I have the Terra Nova route, the Archipelago route, etc. My order, so down here in the various things that I can control about the order, I have control over, of course, the size. I can click up and down and adjust accordingly, or I can just go in there and type in my amount, or I can, let's say, 500 shares. And the price, I can either just set that in there, and this is a limit order. So if I limit my order at 23.70, it says I'm willing to buy this, but only at 23.70. I'm gonna patiently wait because I believe the stock has the potential maybe to find support there, or whatever your reason is. You can also, here are some of the other orders that you can do. You can do an inside limit, market, stop limit, trailing stop, etc. What I'm going to have to do is just momentarily put this on pause so that we can see that. Okay, so what I've done here is I've created a neutral background so that I can change this. I'm just sliding it up simply. And what we're looking at here, these are the types of orders I have, or rather, these are the expirations. So during normal market hours, I'm typically going to use a day order. If I'm looking at anything, a pre-market or post-market, I would do day plus. I never ever use any of these other ones. Those are other options available. Honestly, I don't even know what most of them mean. Here are the routes I can route. I always use Archipelago, and I always keep it in a margin account. As far as order types, though, I'm generally using limit orders. So even if I think that I might need to chase a stock By that, when I say chase a stock, meaning let's say I have a stock like, let me just look at my screen and come up with this symbol here, Evergreen Solar. If I think that Evergreen Solar is breaking out, you can see this, the stock's up a little bit here today. It's trading big volume. We're in a down market though. But let's say I wanted to chase this stock. I thought that I wanted to pay up to $2.50 and maybe I was going to buy 5,000 shares. I would put my order in at $2.50. The reason I would do that is if there wasn't enough size available to fill my order on the offer. Right now, that's not an issue in Evergreen Solar because the size available, you can see the ISE, for instance, right here is offering 71 is the size. What that means is 7,100 shares. So when you see, 71, it means 7,100 shares available, or 7,000 from that participant. Morgan Stanley, you can see MSCO is offering, they say, 100 shares at $2.47. Well, here's the thing about that. The level 2 is filled with lies. There is some truth in there. You can see that certain sizes, for instance, right here, 3866S. The S stands for actual shares available. What I can do though is let's say I want to do something where I want to bid for 5,000 shares of this stock, but I don't want anyone to know. I don't want them to, maybe it's a little bit more thinly traded. And let me just talk about what thin means for a minute. We'll change the stock. So MYRG, for instance, let's take a look at this one. If MYRG, let's say I wanted to buy this stock. If I was to go in with 1,000 shares at the market, who knows where I'd get filled, because the way it shows right now is there's 100, 200 shares available at 2160, 100 more at 2163, 100 at 2178, 200 shares at 2179. So that would only get me about 600 shares. The balance, if I went into a market order, would get filled up here at 2181 where there's 700 shares available. So I would be at a real disadvantage to use a market order there. It would be foolish. At the same time though, if I went in and bidded for the stock at 52 cents, someone else might come up in front of me. I canceled that quickly because I don't want people, I don't want this stock. Maybe I would go in, let's say, and bid 21.31 because I expect it to pull back towards there. So the point is I can change my order. What I can do that's even a little bit sneakier, and what I was talking about is the lies that exist in level 2. If I wanted to buy 1,000 shares, I might go down here and say, let's say I wanted to buy it at $21.25. I would bid for maybe 24 cents rather. I would bid for 100 shares, and the only thing anyone else would see is a bid for 100 shares. But what I did was I clicked this reserve amount for 1,000 shares. So anyone who's looking at this would only see a bid for $21.24 for 100 shares. Now what I can do is do something a little bit even sneakier, which is this discretionary order. I like to use the discretionary order a lot. So what I would do is I would show 100 shares, let's say at $21.20, or maybe even I'll go all the way down to 21. But I'll put in discretion to fill me at $21.25 25 cents. Let me change that because again I don't want to own this stock. But here, what the only thing that anyone would see right now when I entered that order is they would see a bid for 100 shares at $21 a share. What they don't see is that I'm actually bidding 1,000 shares because I clicked the reserve feature, and that the discretionary level. So I'm showing 100 shares, but I really want to buy 1,000. I want to buy the stock at $21.25 or better. But right now, if you look at 21.25, you don't see any action, you don't see any bids in there. There is no bid in existence there. But I know that there is because I'm bidding right now for 1,000 shares at 21.25 or better. So this bid becomes invisible to the rest of the market. It's a way that I can do what I like to call a double sneaky order. One, I'm lying about the size. I'm telling people I only want to buy 100 shares when in fact I want to buy 1,000 shares. Number two, I'm lying about the price. No one thinks that I'm really participating in this stock, and that shows me that what that does is it allows me to have some anonymity and not spook the rest of the market. If I went in and bidded, let's say when the stock is 2150 to 2155, if I went in and bid 2151, well then somebody else might say, well, I'm not going to let that guy get the stock that I'm bidding for. I'm going to bid in front of him at 2152. And then what happens is you're showing your hand to the rest of the market. You're showing that bidders are coming in for this stock, showing that they're willing to buy at higher prices on the bid, but not quite ready to take the offer. So what does the guy on the offer do? The guy who's offering stock at $21.56 might cancel his order and go put it out at $21.60, saying, hey, these guys are showing that they're getting a little bit antsy. We've got two buyers competing on the bid, and I'm not going to fill them, either one of them, but if they want to fill this order, now they've got to chase the price higher. I'm only going to offer it at 2150, at 2160. Then the guy at 2158 might say, well, wait a minute, it looks like buyers are coming up, so I'm going to cancel my order altogether. And that's how prices move, is that perception in the level two. So again, let's just talk about the significance of the level two. For instance, on Microsoft, there's zero significance. I mean zero, because basically a stock that trades 65 million shares a day, this size means absolutely nothing. You could go in here and buy, I would say, probably 50, 100,000 shares at any given price level and not affect the price of the stock at all. Whereas in a thinly traded stock, a stock that just trades, in this case, 352,000 shares today, then your order has the ability to affect things. And good thing I went back to this because I forgot I had the order in there. I want to cancel that. But again, if I went to a market order, I would get filled on 100 shares at 56 cents, 300 shares at 58 cents, and then the balance, or 600 shares at 21.77. So my average price might be actually about $21.74. So if you've ever seen that the current offer is 21.56 and you send a market order to buy 1,000 and your broker comes back and says you're filled at an average of 21.72, if you feel like you got ripped off, you didn't necessarily get ripped off, but you did put in a dumb order, because you have to look at where is the liquidity, where does it appear the liquidity is. So again, I really think that level two is greatly over exaggerated in terms of the importance. It used to be, but now we have all these so-called dark pools of liquidity where there's off exchange transactions, were negotiated transactions. So sometimes you'll see a stock that has a wide spread. Let's just take a look at. I know this one usually has a wide spread. NVR. Okay, here's a stock that trades 33,000 shares. It's $499.26 bid, and you can see there's 46 shares there bid on the Nasdaq. So that's what that S means. By $500.75 offered. So if you put in a 1,000 share market order here, there's a lot of slippage. Look at the size of that spread. It's it's $1.50 wide. So 1,000 shares, if you bought it even at the offer, you'd be down $1,500. So you have to be aware of how to send your orders, and what this does is what the different colors are is it aggregates rather the different price levels and where the liquidity is in the market. So there's not a lot of liquidity showing in this market. It might be different, than what, and it's most likely very different. The actual liquidity is probably very different than what it appears. You cannot use a market order in a stock like this, because you will get taken advantage of. The specialist will see that, he'll fill you up at $501.50, and then they'll drop the bid to $498, just to see if they can spook you and get your stock back from you. You have to be smart about the way you enter your orders, and you have to be aware that when it comes to the level two and the market makers, the market makers' job is mainly that of filling orders for their customers. That is, they do agency business. They're working as an agent for another customer. They're not usually trading in their principal account. That is, they're not usually taking risk themselves. So they, of course, they want to fill this up with lies. And sometimes, in a stock like let's take a look at that MYRG again. In this stock, what they might do is they might come in here and they might try to go on the bid and show 5,000 shares bid at 21.12, or they might go in and show that at 21.54. I'm not going to go up there and do that because I don't want to own this stock, but they might do that so that people who are watching this level 2 look at it and say, wow, there's a big bidder under there. Let's take the offer at 21.60. Let's take the 21.61. And you might actually be buying from the person who put that big bid up there. What they're trying to do is put up a bluff basically to say, yeah, I'll take it at 21.38. But they're saying, I don't really want it because I have stock for sale over here, but they're not showing that. So that's just a little bit of insight into the level 2. I get a lot of questions about it, and people say, how do I use it? A lot of times when it comes to executing an order, what I will do is let's say again, I'm going back to ESLR. I'm not going to get involved in this stock right now, but if I liked ESLR, what I would start to do is see, okay, how much size is available at $21.49? Well, I've got, it looks like maybe 20,000 shares. So if I'm going to be a 5,000 share buyer, I don't want to buy it until maybe there's, at that price, until there's maybe 6,000 shares left. And I want to see that there's more shares available, that are bidding for this stock than there are offered. So I want to see 200,000 shares bid and 12,000 shares offered, and then I'll take 5,000 of those and hope that my orders induce other people. So when it comes right to the breakout point, just as it crosses the line, basically, when I say a buy above $2.49, I'll have it loaded at 250. And if I only see 2,000 shares offered at 250, I might put my order in at 251 for 5,000 shares, press the buy button, know that I'm going to take that 2,000 shares at $2.50 and get filled on the balance of the position at $2.51. I don't mind getting filled on the balance of the position at 251 because it does a couple things. It shows that there's an aggressive buyer in there, and it will usually show up as a bunch of prints. Usually it won't just show 3,000 because the liquidity is fragmented, meaning there will probably be an offer for 500 shares, an offer for 1,000 shares, and another offer for 1,500 shares. So it'll show up as three separate transactions on the buy side, whereas I just sent one order. And that'll get people excited. It'll say, wow, there's a big buyer in there. As soon as I see it crossing that $2.51 level, what I'll typically do is I'll offer out 1,000 shares at maybe $2.59, and I'll try to make $80. In other words, and I'll hold 4,000 shares and look for prices on the chart where it may encounter resistance, and I'll sell a little bit into that. Meaning that is, I'll take I'll sell 1,000 shares at $2.63 because that might be R2, or it might be a prior level of support. And then if it starts falling back, maybe I'll sell another 1,000 shares at 256. Just always reducing my risk, and that's for aggressive day trades. For an investor, the level 2 is pretty much useless, but generally speaking, I would say that 99% of my orders are limit orders. So I hope this has helped somewhat. If there are further questions, be sure to ask them in the next Monday's live event. Thanks.